Welcome. We are looking at chapter 4 this week, which is job costing. So we will continue to use the 5-step decision process that we learned in chapter 1, and we'll use that in this chapter to evaluate whether we should bid a job or what amount to bid for the job. So as we explore this chapter, we'll need to do some things. First of all, the terminology is going to be very important. So we need to go back and recall chapter 2 terminology, where it reminded us of some of those different words that we had learned. So for instance, cost object. That's anything that we can actually measure costs on. Direct cost, we said, was related to the cost object and can be traced to the cost object in an economically feasible way. So we really need to make sure that it's worth tracing. Indirect costs they cannot be traced to the cost object, or it might be very cost inefficient, so we'll actually allocate those. Cost assignment, if we remember that term, it's a general term. It includes cost tracing for direct costs, as well as cost allocation for indirect costs. So in chapter 4, we see 2 new terms introduced to us, and they'll be very important to us as we move forward with the text. So cost pool is a grouping of individual indirect cost items. Okay, so cost pool is a grouping of individual cost items. Cost allocation base is a systematic way to link indirect costs to a cost object. So those are 2 important things that we'll need to keep in mind as we review the material. So the next big concept in this chapter talks about job costing versus process costing. And this table does a good job highlighting different sectors and how some examples would fall into either of these 2 categories. But before we talk about that, we should review what these things mean. So job costing or job order costing is used by a company that makes a distinct product or service called a job. So they are very different in nature. The product or service is often a single unit, and the job is frequently the cost object. Costs are accumulated separately for each job or service. So that's how that one is defined. Process costing, on the other hand, is used by companies that make a large number of identical, homogeneous products. Costs are often accumulated by department, and then they're divided by the number of units produced to determine the cost per unit. It's really an average cost for all units produced during the period. The cost object is masses of similar things. So a good illustration, in addition to the one that you see here on the slide, would be a mechanic's invoice for a car repair service. So this would illustrate job order costing. It has direct materials, direct labor, and overhead sections. Each repair job is different. I might go get my brake fixed, you might go get a new muffler. So each one of those things is different. The repair shop does not perform the same activities on each vehicle that's brought in for repairs. Therefore, this kind of system must be done under a job cost system. We don't know the labor associated with one brake job versus another brake job. So again, a mechanic, if we think of their invoice, and it has different components like direct materials, the brakes that they have to buy, the labor, the amount of time that their technician works on replacing my brakes, and the overhead, which would be maybe a piece of the rent that they have in the bay that my car is being fixed. That would be a good example of job cost. An example of a process system, you could think about maybe the inexpensive pen that you're using right now to take some notes with. The manufacturer makes millions of these. Although one person in the class might be using blue medium fine point or blue medium ink, and another person in our class might be using red fine point, the process is the same. The company uses red instead of blue, fine instead of medium. The pens are manufactured by the same process at the same cost for each pen. So hopefully that clarifies the difference between job cost versus process cost. Other key concepts in this chapter, you'll see that we need to consider the new 7-step process for job costing. And that 7-step approach really is nicely identified in the book. So step 1 is identify the job that is the chosen cost object. Step 2 is identify the direct costs on the job. So that would include direct materials and direct manufacturing labor. So if we think about some of the things that go into that step, direct materials are often ordered by a requisition. Quantities are based generally on engineering specifications. The labor time is based on an employee on a particular job. So step 3 then is to select the cost allocation base. So how will we actually allocate our indirect costs is what this means. So because these costs can be traced to the job, they have to be allocated in some kind of systematic manner. Identify the indirect costs associated with each cost allocation base is step 4. Hopefully we have a cause and effect relationship that can be established between the costs incurred and the cost allocation or the driver. Step 5, compute the rate per unit on each cost allocation base. And the way we do this is to calculate the budgeted manufacturing overhead rate. And that equals our budgeted manufacturing overhead costs divided by our budgeted total quantity of cost allocation base. And we'll do some practice with that. Step 6 is compute the indirect cost allocation to the job. So we're going to multiply the actual quantity of each different allocation base by the indirect cost rate for each allocation base. And finally, step 7 is compute the total cost of the job by adding all the direct and indirect costs. So we will actually look at an example in a little bit. Now, with modern technology, fortunately, managers have much more time to accurately product cost and understand the information. Electronic data exchange, barcoding, electronic materials requisitions, and electronic labor records are just a few of the ways that make this system much more manageable than in years past. The other key area that we want to discuss is actual versus normal costing. Actual costs can be directly traced to a cost object by multiplying the actual direct cost by the actual unit quantities. Although this is very effective, it's often very difficult because managers really prefer to calculate indirect costs over a longer period of time, and it really makes it impossible for us to complete the accumulation of costs on individual jobs. So for this reason, we need to talk about these two concepts. So actual costing is a cost system that traces direct cost to the cost object by using actual direct costs times actual quantities. It allocates the indirect based on actual indirect costs times indirect quantities. In normal costing, that last piece changes. So the key difference is that in normal costing, it traces direct costs to a cost object by using the actual direct cost rates, just like in actual. But the difference is that it allocates indirect costs based on budgeted indirect cost rates. So that really is the distinguishing difference. So the last area that I want to highlight is the flow of our costs. And I thought we would do this by looking at an example. So if we look at exercise 4-24, I think this does a great job highlighting some of those different things that we really want to explore. So with that, if you flip to exercise 4-24, I'll give you a minute to pull it up in your Inkling book so that you can follow along. So the University of Chicago Press is a wholly owned by the university. The press publishes and maintains a stock of books for general sale, and then it goes forward and gives you some information. So the first thing it asks us to do is prepare a diagram of the job costing system. So you can see here's how the diagram would look. So manufacturing overhead, direct manufacturing labor costs would be the allocation basis. The cost object is the print job, and that's how that diagram would look. So from there, the next part says prepare the journal entries to summarize the transactions. So here you see each of the journal entries, and I did omit the explanation. Once we have those journal entries done, then you could actually go forward and post the T accounts, which I did not do. So from this, you can see, for instance, direct materials and supplies were purchased on credit. We would actually put that to our materials control account, and then we would credit the payables. Number 2, direct materials were used. That then flows into the work in process, and it leaves the material account. 3, indirect materials issued to various production departments. So from there, we'll debit the manufacturing overhead, and we'll credit the material controls account. Now, when you put these into T accounts, you'll really understand the flow. So I would encourage you to take, again, exercise 424 from the book and go through it, and you'll see how this cost flow really does work. So what's next? You need to complete some assignments in my accounting lab. So you should be looking at exercise 416, 19, 23, 25, 34, and 40. 40 is an ethics one, so you may want to reference the ethics slides that I posted from last week. You also are going to work in teams, as we talked about last week, to complete the fine print company case. You will upload your presentation by, again, 10/11. And before I see you on the 12th, you should read chapter 5, and we'll be going over that in class. If you have questions outstanding from chapter 4, you need to post those into the question and answer forum. I will not be spending time on chapter 4 questions unless I see some coming through in the forum. So my class, when we get together face-to-face, will focus on chapter 5 unless I see some activity in that forum. So with that, I know you have a lot to do. I look forward to seeing you soon. And again, use the forum and we can communicate that way. Have a great week.